One of the big lessons I learned from a person who had quite a lot of money was that it's in losing money, making investments that lose money, that erodes your total return. It also erodes your confidence in making investments. So I found really smart people who had a lot of money, took very little risk. First question they'd ask is, can I get my money back out of this investment? And the second question is, when? And if you didn't solve those two questions, they weren't very interested. So when you look at a portfolio, you should need to ask the same question. When am I going to get all my money out, no matter how bad the conditions are? And one of the great advantages of dividend stocks is that they perform consistently well in recovering markets, such that you get your money back faster. So the first set of risk, which is your fear of losing, is something that dividend stocks can address. On a more technical level, we do two things. We stick only in certain segments of the market where we know there's predictable and consistent returns, and they come from predictable and consistent dividends. They're sort of like Canadian banks, but Canadian banks have low dividends. I mean, it's kind of shocking. They wouldn't make our US fund ever based on their dividend growth. So we can buy stocks in the States that have dividend growth every year, and they change, but they can make money every year for investors. And that allows you to build portfolios where clients will stay in because they're confident that there's a recovery, because the companies themselves haven't been adversely affected by market changes. So that's the first thing you have to do. The second thing you have to do is stop listening to everybody else and focus on what you know how to do. Actually, it does work, and it makes, it's by listening to other people that you get out of your discipline. You need a discipline. We test what we do, we analyze what we do historically, we don't do things that we don't test, and I guess our results prove that that works really well. And they work exactly the way our research said they were going to. We get about the same return now that our research said we should get. That's, I think, pretty compelling feature to when you're talking to a client, and I'm a client, so I think about those things too.